Hello traders, welcome to UZFX. Okay, in UZFX, I'll be organizing YouTube videos about the smart money strategy, how I've been using it to trade the forex markets and how I've been profitable with it. So, unlike other YouTube channels, you don't find the videos or the about the concepts and all those stuff in the form of like A to Z. But here I'll be creating the videos right from the beginning of how I started learning it and everything about the smart money strategy. So, and I know this is a good thing you're hearing, and I know you'll be clicking the subscribe button and the bell notification button to be able to get all the videos when I'll be publishing them. Okay, just like I have on my screen, the smart money concept. I know most of us must have heard about the smart money concept, and or most of us might have not heard about it. But from what I have here, the smart money concept is just basically a way that seems to replicate the way the big banks and the big institutions trade the forex market. And I mean by the big banks, banks just like example the JP Morgan, Chase, the HSBC, and etc. So these big banks actually, as a result of their huge capitals, they are able to manipulate the forex market, to play it in their favor. So they lure the retail traders, or would I say people that are still new in the market, the newbies, into taking wrong position. So just like they have the money, they can hardly lose in the forex market. So they will try to always bring the price to their favor and make things to come to their favor. Okay, here we are on the chart. I know you'll be wondering, why do trend lines don't work? Let me show you this one. You say, okay, why did I get taken out of this market? Why did it not work? And stuff like that. We have another one. You're wondering, why did I get taken out from this support zone? From this support zone. You can see it. Why did price fail to hold when it reached this support zone? And we have another one. Why did this trend line fail to hold? You can see it. This. Why did the trend line fail to hold? You can see it gave a fake red candle before it pushed up. So all these stuff are as a result of what we call liquidity, which is created by these big banks. So basically in this episode, I will be giving an introduction to how the strategy works. But on my next episode, I'll be talking and showing you how to actually trade it, like how to catch trades with as little as 10 pips stop loss, 15 pips, 20 pips stop loss, and the rest of things like that. How to catch, at least a trade of 1 to 3 risk to reward ratio, nothing less than 1 to 3 risk to reward ratio. Because with this strategy, you can be getting sniper entries. I know you must have heard of sniper entries. You'll be getting sniper entries and stuff like that. Okay, from here, you could see this bullish candle, this green bullish candle, followed by a strong bearish candle. This is what we call an order block. This green candle is what we call an order block. So as you can see, from this point, let's mark it out. From this point, to this point, let's go down to the 4-hour time frame. Let's mark out this place as well. This point. But let's go down to the 4-hour time frame. Let's watch out what happened here. Okay. Where is it? Okay. We have it right here. Okay. So from this point, as you can see, from this point to this point, let's draw our trend line. From this point to this point, exactly, you will see how the trend line, price came to the trend line, it bounced off from the trend line, came here again, it bounced off a little. So this is actually where this market got liquidated. This is where actually most research traders got taken out. Because see, from the basic knowledge of marking out the trend line, you take the first point and the second point, then at the third point you buy. So you can see it failed here. So what did these market makers, what did they do? Like these big banks, what did they do in this situation? Because see, after that you see a big impulse move. So what did they actually do here? That's what I'm actually going to explain now. So what they did here was that they added some buys here to cause a fake entry. They added some buys, let's say 30% of a buy. Then they came to this point, added the sell that is bigger than that buy to be able to push the market. Since before you can be able to sell in the forex market, you need a buyer. So they had to add a little buy so that they can actually entice the retail traders to enter long from this point. And after that, they added a sell. That's exactly what happened here. And that's why we marked it as an order block. That's what it's called, an order block. So let's go back to the daily time frame. So I hope you're getting that. So from the daily time frame as well, you could see the green candle followed by a large impulse red candle. So as a smart money trader, like what I will be revealing in this channel, you actually mark out these points because that's where traders got liquidated. That's where the smart money made the retail traders to enter the wrong position. So after marking it out, you will see they actually went back to that exact same place in the future. Why did they do this? You will ask yourself. The reason is this: you remember they added some buys around this point, just like I said. They added buys at this point and they added sell that is more than the buys, which is their own intended direction. They sold, they made profit. They had to go back to the exact same point to close the buys which are on drawdown. As you can see, they went back exactly. Then this is what we call mitigation. You'll be hearing this more often in this channel. So this is what we call mitigation. They went back exactly, mitigated the order block. That's what they call it. Mitigated the order block, closed their buys. And as they went, before they went to mitigate this order block, you could as well see that we have another liquidity in the market. As the market started pushing down, some retail traders as well started going short following the trend line, but it got taken out because the market makers, the smart money traders, have already made some huge amount of profit in this sell position. So they had to close some. go back to add another sell, thereby closing this bar here. For them to do that, they need what we call liquidity, another liquidity. So they need liquidity to add their sells or their buys. They also need liquidity to go and mitigate their order block. So from here, they had to create another liquidity to go back and mitigate this order block. As you can see, from this point, some retail traders, looking at the daily candle, you think, okay, yeah, this is a breakout. This is a breakout. You wanna sell from this point. You see, you will get taken out. Then from this point as well, if you mark out, you say, okay, it's gonna reverse from this point. At the same time, you get liquidated. Just like that, they kept on using liquidity to get back to their mitigation block. So after the mitigation, you will actually see the market tanked down, all the way down. And if you check here as well, we also have another liquidity in this place. So they basically use liquidity and stuff like this to get retail traders to enter the wrong positions or take wrong position in the market. Because for you to sell in the market, you need a buyer. So you have to do something to bring in the buyer so they could sell. You have to do something to bring in the buyers, to bring in the sellers so that they could buy. So that's just how it works. So I'll be revealing everything that has to do with this smart money concept, everything that I know, everything I've been using to trade. I'll be revealing it in this channel, so you can as well follow me and trade it. It actually makes sense because I've been trading it, and you can as well backtest it. This stuff that I've showed you now, you can as well go to other pairs, backtest it, and stuff like that. Could be asking, why didn't this one work as an order block? Yeah, that's the right question. You see, it got filled. If you go down to the forward time frame, you see this other block, they mitigated it here, right here. But this one wasn't actually mitigated enough. You could see it. It wasn't actually mitigated enough. But this one, they mitigated this one, went down. That's just how they were moving before they could come back to this major swing point to mitigate it. And after that, you could see what the market did. You could see what the market did. The market just kept going down and down and down, just like that. You could go to other pairs, to check out these stuffs. Okay, let's go to, this is GBP USD. Let's go to Euro USD. Let's check on Euro USD, see what happened there. Okay, this is the daily time frame. As you can see as well, we have market has been bearish all along. Market has been bearish all along. So let's say from this point, you could see another order block in this point, because traders started entering, buying this position. It got liquidated. You could see the order block. Market went down, came back to the same order block, filled it, and went down. So this is basically what happens in this smart money concept. So in my next episode, I'll be releasing how to trade this strategy confidently, how to the right direction, the top-down analysis, everything that you need to know about smart money concept. I'll be revealing it in the next episode. So I know you'll be subscribing and putting on your bell notification button to be able to know when I'll be publishing these videos. Okay, see you on another video. Thank you.